Welcome back to the Optimus process part 3. If you have not watched the first two parts of this series, I highly suggest that you do in order to get the full benefit of this lesson. We'll be covering precision entry. That's balanced price range precision entry. You ever find yourself entering too early on a pullback only to get stopped out and price continues to trend the direction that you anticipated? Well, this is going to help you to get in on the actual reversal and continuation of a trend. So let's begin. So here's a 1 hour chart. You notice here, we get this nice bearish candle closing below the low of a bullish candle. So that's our trigger to look for an entry from this close and above. Down to the 15-minute chart, we print a key candle here past all the lows of these bullish candles. And so we're looking for entry again from the close and above. Drop down to the 1 minute. And now this is the pullback where we want to precisely where the market turns to continue its trend. So how can we determine when that will be? Well, you notice here, price moves up, creates a fair value gap, takes out a high, but on the way back down, it does not create any fair value gap. So that signals to us that the price wants to still move higher and that we're not looking for an entry yet. As price goes higher, it creates a fair value gap, takes out this high, but on the way back, it does not produce any fair value gaps. Now, this drop here is interesting. It takes out a low, right? But it does not produce a fair value gap. So again, we will not get tricked into entering in here. The reverse is not confirmed yet for us. Now it moves back up here. And on this drop down, we do get a fair value gap and it does take out a valid low. Why is this a valid low? Because this low takes out a high. So a valid low is when the low takes out a high and it's broken right here. And then it produces another fair value gap here and a tiny one here. And again, takes out another low. So when this happens, we get a fair value gap going up and fair value gaps going down, breaking lows. This is when we get our confirmation that the market now wants to continue lower. And so now we look for entries on any pullback. So here you get a pullback, you can enter in this fair value gap. You also get a breaker, high, low, higher, high, break. And we get another opportunity here. This bearish candle closes below this bullish candle, and we can enter from the close and above. So you can enter this fair value gap in this breaker or on this small pullback. Now, let's look into this pullback here. If you notice, this is just a fractal of this whole pullback, or ICT's market maker sell model. Accumulation, buy side, and sell side. The same thing is occurring here when you're on side. Watch this. This is that small pullback that we just saw in the last slide. You notice here, pulls up, small fair value gap, no fair value gap going down until here, but it does not take out a valid low. Why is it? You might say, oh, it took out this low. Yes, that's not valid because this low never takes out any high. And so it continues up, fair value gap up, fair value gap down. And you say, oh, we got two fair value gaps. Yes, but it does not take out a low. So we're not interested. We let it continue up, fair value gap here, no valid pullbacks, another fair value gap here, and it begins to pull back. We get a fair value gap here, but again, fails to take out any low, valid lows. It's back, comes back down, takes out this low, but no fair value gap. So we're still not interested. And look at this, price comes back up, back up, back up, consolidates, drops, takes out a low, but no fair value gap. And then pushes up with the fair value gap, takes out this high, and then pushes down with another fair value gap and takes out this low. This is a valid low because it takes out this high. Now we're interested. The turn is confirmed to us. So now any pullbacks, we're looking for PD arrays to enter in. It forms a breaker here. You can enter into this fair value gap that is within the breaker, or you can wait for a bearish candle closing past the low of a bullish candle and enter from the close and above. You have one entry here. Here's another one. Takes out these two lows. Close here, anything above, enter. You notice how price is fractal. As you get used to seeing this, you'll become much better at entering on pullbacks at the right time when the market actually has turned to continue its original trend. Here's another example. This is just one candle below the one we just looked at. So again, going at the hourly, you got a closure below these lows. So we're looking for an entry from this closing price and above. 15-minute key candle. Close below this low, looking for an entry, anything from this close and above. 1 minute, this is the pullback. Let's follow it. Moves up, fair value gap, takes out a high, no pullback with a fair value gap, creates another fair value gap, takes out a high, comes back, and then drops with a fair value gap, and it takes out this low here. This low takes out this high, so it's valid. Pulls back into the fair value gap. We can enter there, or we can wait for a bearish candle closing below the low of a bullish candle from the closing above, and enter there. So I hope this helps you to enter at the right time of pullbacks after the market has confirmed its turn and continuation. Hope to see you in the next video.